Welcome. My name is Joshua Stallings, the Deputy Director of FHFA's Division of Bank Regulation. I am joined today by Amy Bogdan, an Associate Director at the FHFA. Let me extend a warm welcome to our roundtable participants and to all of you watching along and in listening mode on the live stream. Our discussion today will focus on the Federal Home Loan Bank's products and services and how well they meet the needs of of their members and the communities they serve. For the benefit of those joining us for the first time, today's roundtable is part of the Federal Home Loan Bank System at 100, focusing on the Future Initiative. More information, including the video recording and transcripts of past roundtables, as well as information on upcoming listening sessions, can be found on our website. I would encourage all to visit the website to learn more. We look forward to the discussion today and the feedback we will receive as we continue this initiative. Let me turn it over to Amy, who will review the rules of engagement. Amy.
Thank you, Joshua. I am Amy Bogdan. I will be helping moderate the discussion today. We expect and hope that we will have an open and engaging discussion. No recommendation or view should be considered to be off the table, so we want to hear a wide range of things. And we encourage you to offer differing views about some of the important questions that we will be covering today. We also want this to be orderly, and as such, we ask that everyone turn their name placard to the side to indicate when you have something you'd like to say. We will try to call on people in turn. And we ask that you engage knowing that you will not necessarily agree on all points, but in a respectful manner, and ensure that everyone has a chance to speak and that we keep every discussion topic. If someone is going long, we may interject from time to time to keep the conversation moving. Second, the review is meant to bring forward views and reasoned perspectives of Federal Home Loan Bank stakeholders and highlight areas for further consideration. So again, as I said, don't limit your responses to what would be possible under current conditions. So there could be changes. Third, we will have a break about halfway through today's event. And finally, for the benefit of those in the audience, the roundtable participants have been given a set of prompts that we will reference during the course of this afternoon's discussion. We also have a disclaimer that we need to make you aware of, and which I will read verbatim. We have organized this roundtable to obtain your input on the mission of the Federal Home Loan Banks, including input on several specific questions that were sent to you prior to the meeting. During today's session, FHFA will not discuss the status or timing of any potential rulemaking. If FHFA does decide to engage in a rulemaking on any matters discussed today, this meeting would not take the place of a public comment process. The rulemaking document would establish the public comment process, and you would need to submit your comments, if any, in accordance with the submission instructions in that document. FHFA may summarize the feedback gathered at today's session in a future rulemaking document if we determine that a summary would be useful to explain the basis of the rulemaking. Anything said in this meeting, and that also includes reactions, nodding, even eye rolling, should not be construed as binding on or a final decision by the director of FHFA or FHFA staff. Any questions we may have are focused on understanding your views and do not indicate a policy or legal position. Participants in today's roundtable may have a financial interest, whether direct or indirect, on outcomes that may affect the Federal Home Loan Banks and their business. And as Joshua mentioned, today's roundtable will be live streamed on FHFA's website and video recorded. FHFA may also prepare a transcript of today's session, which would include the names of all speakers and the organizations they represent, if any. The recording and any transcripts prepared will be posted on FHFA's website and YouTube channel, along with any materials being presented today or otherwise submitted in conjunction with the roundtable. With that, I'll turn it back to Joshua.
Okay. So Amy and I had the chance to chat with our roundtable participants already, but let's make sure everyone watching knows who they'll be hearing from today. So I'm going to ask that you introduce yourself and state your affiliation with the Federal Home Loan Bank system, whether that be current in your current capacity or former capacity. If you have no affiliation, that's also fine. Just note that. Let's start with Kristen and work our way around.
Sure. Good afternoon. My name is Kristen housing finance agency. There's one in basically every state in the country. So we are a housing associate customer of the Federal Home Loan Bank of Chicago. And in that role, we are able to utilize several products, including a warehouse line, and we're one of 13 HFAs that have standby bond purchase agreements. But I'm also a strategic partner because housing finance agencies and the Federal Home Loan Bank are part of the affordable housing finance ecosystem, and we work together to address needs and challenges around affordable housing in the Chicago and Wisconsin region, where we border. And then lastly, I am a member of the Community Investment Advisory Board with the Federal Home Loan Bank of Chicago.
My name is Tony Lenti. I'm the Executive Director of the Traverse City Housing Commission. I've been involved with the Federal Home Loan Bank of Indianapolis for a number of years, including my work down in Indianapolis with neighborhood community development corporations and a small nonprofit developer applying for HP support back in the mid-90s. And I currently have 2 HP grants for some projects I'm working on at the moment. I've also served on their advisory council and was also the chair for 2 years.
Justin.
Good afternoon. My name is Joe Riley. I'm the president and CEO of the Community Development Trust. CDT is one of the largest non-bank CDFIs with gross assets right now about $2.5 billion, but growing rapidly. Our primary focus is on the creation and preservation of low and moderate income housing across the United States. We have made loans and investments in 42 states, also in D.C., Puerto Rico, and the U.S. Virgin Islands. We've been a member of the Federal Home Loan Bank of New York since 2013. We've had a very good relationship with our colleagues in New York. We appreciate the relationship. We feel very strongly that our missions are aligned. They're working with us. So far, we've borrowed about $160 million, which has positively impacted 4,000 units of affordable housing. And we think that we can do more, and I think that they want to support us in doing more. CDT is a for-profit entity. It's a double bottom line company. Our mission is to provide long-term capital for the preservation of affordable housing. But we also have investors who are expecting a return on their investment. So we're constantly balancing those two objectives. As I said, we appreciate the relationship, and we're hopeful that we'll be able to do more with the Federal Home Loan Bank of New York as we go forward.
Thank you. My name is Linda Smith. I am the executive director of an organization called You Snapback in Detroit. And I have currently served on the Federal Home Bank of Indianapolis Advisory Board for a number of years. Currently, we operate the NIP, the Neighborhood Improvement Program, on the behalf of a member bank of the Federal Home with the Home Repair Program. And happy to be here and happy to be working with the Federal Home Bank, which we'll talk a little more about a little later. Thanks.
All right. Hello. My name is Donald Rencher. I'm Group Executive of Housing and Planning for the City of Detroit. At one point, I was the director of our housing department here in the city. And I guess since my time, the Federal Home Loan Bank has been integral in being a part of providing additional gap funds for development projects that we believe that we desperately need to get into ground and start. And so from then on, I believe that the partnership has gotten stronger. We've seen a lot more funding coming into our deals, and there's a lot more cohesion. And so I just consider the Federal Home Loan Bank as a partner, but across the board, based on their mission and the work that Linda is talking about, whatever we're doing to try to help improve the lives of individuals in the city of Detroit is essentially my main focal point, and consider that work to be important. And so I consider as a partner, but of course I'm not a CDFI or anything like that, but I believe the work is valuable here.
Good afternoon. My name is George Collins. I worked at the Home Loan Bank, or within the Home Loan Bank system, 3 different banks actually, but most of my career was spent at the Home Loan Bank of Boston, where I retired as Chief Risk Officer in 2019. I think I'm here because there's a lot of risk questions that are on everyone's mind as it relates to what the banks can and cannot do, and hopefully I can shed some light on that without being constrained by currently being a Chief Risk Officer, which is kind of nice. So I've always been very interested in housing, and given the current challenges within the housing markets, as well as in my own community in New Haven, Connecticut, I'm glad to be asked to participate here, as well as other forums, to hopefully we can push the ball forward in some way. Thank you.
Good afternoon. My name is Sonia Mays. I am the founding CEO of Develop Detroit, which is a mission-oriented real estate development organization located here in Detroit. Me and my team, we wake up every day and think about, strategize, work toward providing as much stable, high-quality, affordable housing as possible for the people that we serve. We are predominantly a housing organization. The overwhelming majority of what we do is build, preserve, renovate rental housing, but we also operate a home building entity through which we offer home ownership opportunities. I am a customer of the Federal Home Loan Bank, in that the AHP tool is one of the most vital tools in our arsenal as we work to deliver as much housing as possible.
Good afternoon. My name is Timothy Ha, serving Chief Investment Officer at First Independence Bank. First Independence Bank is established 1970, like 53 years ago. It's a Black-owned minority depository institution headquartered in Michigan. Last year, we opened the 2 branch offices in Minneapolis, trying to expand our footprint. We are also the certified community development financial institutions supported by U.S. Treasury. So we're trying to expand to serve the underserved communities and a low moderate income area to bring the customer in, trying to provide the financial literacy, and also that trying to provide the best customer service. Currently, that First Independence Bank is the member of a Federal Home Loan Bank Indianapolis. I think that that Federal Home Loan Bank Indianapolis is the best out of that FHLB, that system banks, because before I joined the First Independence Banks, I went through the 13 mergers for 12 years. And I've dealt with the multiple other FHLB system banks, such as FHLB Des Moines, San Francisco, Cincinnati, and Chicago. They're all good, but since I know that FHLB Indianapolis for longest time, and then know a lot of people, so I'm here to have that informative and a productive discussion about the FHLB system bank, and also that I'm trying to make the FHL bank system to the 2.0, so that we can get the better benefits for mutually.
I just want to thank you for the 10 angry calls I'm going to get because of that. So let's get this conversation kind of started a little bit with kind of level setting on, I know not everyone here is serving the same communities, but can we start with a little bit more of a conversation on what some of the housing and community development needs are in the communities that you serve, and kind of get an idea of what the level of need is before we dive into what products the banks have available. And I'm going to put somebody on the spot to go first, and Sonia, I'm looking at you. You want to lead us off?
Okay, great. Well, so I think I'll start with I'm going to get that right. I'll start with the obvious, what I think is the obvious, at least in my market, Detroit, and that is just the sheer the limited availability of affordable housing. My portfolio at Develop Detroit is consistently what I would describe as oversubscribed. We are always shocked at how few truly affordable units are available to Detroiters. So I think that's probably the Captain Obvious answer. From there, Organizationally, we've actually been focused the last 4 years in really trying to crack the code around affordable home ownership. So I mentioned this earlier, the vast majority of what I do is rental. It is, I think organizationally we'd be happy if all we were able to do is provide as much rental housing as possible. But certainly the next evolution of that work is really thinking about how do you take somebody from a rental unit into a more stable homeownership environment where they can start to build wealth and greater stability for their families. And I'd say it's there where we see another pretty large gap, and that is the tools that you need to deliver, the capital tools that you need to deliver an affordable homeownership opportunity in Detroit are pretty limited. We have gone as far organizationally to repurpose, if you will, some existing tools to create more opportunities for homeownership in Detroit. So for example, about 4.5 years ago, Develop Detroit, we secured a new markets tax credit allocation, which is typically not used for housing, and though it has been used in other places in the country for homeownership, is not generally how you think of that tool. But that was an example of the lengths that we had to go through organizationally to be able to deliver homes to a, call it an 80% AMI customer. So those are the two things that kind of keep us up at night. And if I had to say where I suspect the absolute greatest opportunity is, it is on the developer side, production side, creating more tools that allow us to deliver a truly affordable home, particularly in this environment, this unfortunate environment that we're in with rapidly rising construction costs, as well as inconsistently priced material costs.
So Donald, where you wanted to?
Yeah, so I forgot to turn on the mic. I would echo everything that Sonia says. I mean, as a developer out in the city of Detroit ecosystem, I can tell you that she probably has a front row seat to exactly the issues that we're seeing. I can tell you in my position to make sure that the city of Detroit is progressing and moving forward. I always feel like I'm in the middle of trying to retain and attract, which are both different, very, very different things, right? Like, how do I make sure our Detroit residents have the opportunity to continue to stay and live in the place in which they are, and how do I attract more folks? And to do that, you really have to have a different range of housing typologies and opportunities for folks to choose from. And then at the same time, you're dealing in an ecosystem which any development project you actually start working on is financially upside down from the onslaught. And so we need tools just to make a regular market rate development project work, and even deeper tools to make an affordable housing project work. And I need both of them for the city of Detroit to move forward. And so I think every day we work on trying to find developers with capacity and also tools and financial resources to push collectively to move forward with our idea of bringing a diverse housing to the market. Very interested in home ownership. As investors come to the city of Detroit, making sure people have equity and opportunity to own in the place in which they live, and turning the mindset from a rental to a home ownership is, we have, for the first time last year, have gone to Detroit residents owning more than renting in the city of Detroit, which is a big change. So we have to stabilize and do the things that Linda is doing so we don't lose homeowners. But the market conditions in the city of Detroit are probably our biggest issues, high taxes and what it takes to actually get projects done. So.
Before we move off of Detroit, Linda, anything you wanted to add?
Well, I like to
Okay.
I'd like to speak about the home repair program, the neighborhood improvement. In 2019, we had over 500 people line up at our office building, and we got to serve them all regarding the home repair program that we operate on the behalf of First Independence Bank and Federal Home Bank of Indianapolis. People are living in homes that are rather old. Detroit has a wonderful, wonderful housing stock of older homes, but the funds are not there for them to keep it up. And they need things like the roof, windows, doors, just over years of deterioration. And so with the NIP program, that allows us to serve residents who have lived in their homes some help with staying in their homes, with furnaces and hot water tanks, small things, but it's major to a homeowner who's on fixed income and just struggling to get by. So the need, one of the needs that we're seeing now is the need for residents to stay in the homes that they own with a little help, and by providing the support for that program. It's been just wonderful. Already we have 256 people on the waiting, well, we don't have a waiting list, but on the inquiry list. And the program will not roll out till May. So you could tell, and they're calling every day trying to see how they can get some assistance. Thank you.
Tony, your experience, obviously in Traverse City, might be different. Anything that you want to bring to the floor?
Sure. Let me just say a few words about my area, Northwest Michigan. And it's a part of Michigan that has, and like in my county, has grown at 5 times the state rate of growth. And it is a tourism-based economy, agribusiness-based economy. And we have a somewhat different development pressures. We have a lot of people wanting to live there. And what's caused for developers, what's that mean is that land costs are through the roof. So when we have high land costs, high construction costs, high lumber costs, you start to see more gaps in development budgets. And so we try to put these capital stacks together that are quite complicated, and there's just no one window anyone can go to build affordable housing. Federal Home Loan Bank oftentimes is in that capital stack, but it relies on its member institutions to serve that. And while we have a lot of financial institutions in Traverse City, mostly because of the wealth that's already living there, there's not a lot of interest in serving the populations that affordable housing developers want to serve. And so there's just not a lot of capacity at those members to be partners, to shepherd an application through, and a willingness to do the extended compliance. So we have nonprofits that are working in the region that have some limited capacities, and they're trying really hard. But we also have financial institutions that do have some limited capacity as well. And I wanted to make sure that that's in rural parts of this country. There's probably more of that than not. And I want to make sure that was on the table. Thanks.
So, Kristen, coming from a different market, anything similar, different that you're seeing?
A lot similar in Chicago and other urban areas of Illinois, as well as the need for affordable rental housing is pervasive. I would drill down a little bit to say that low-income housing tax credit product helps address the 30 to 60% AMI group of renters, right? And we always need more of that, always, always. Also in Illinois, we see, particularly Chicagoland region, more need for serving people at 30% and below AMI. That's a growing population. And interestingly enough, more need for renters at the 60 to 100% AMI. It can be hard to afford rent in Chicago, for example, right now, if your household's earning $100,000 a year, which to me used to sound like a lot of money and still does, but to not be able to just afford a basic rent at that much because rents have gone up so high. And so, and Donald said it, what all that it has in common is that to do any of that, you have financing gaps. And so those financing gaps are there. Then on the home ownership side, same thing, whether it's rehab. The only thing I would add is that there's a huge need for new inventory. This is across the country, particularly as well as in Illinois, though, because not only do we need to rehab our, on average, 90-year-old homes, but we need new construction, right? There has not been enough new construction built for a decade, and new buyers, younger households, people like new, and so there's also a huge, and we do have land, and so there's a huge need also for new construction. I think the last thing I'll bring in that is related is that there is a need for a more diverse development community that's doing all of this. So when I walked into IDA 3 years ago, I looked around and I knew I was a banker, I knew a lot of the developers doing the light tech, and I was like, you guys are all great guys, and they almost all were guys. But you're also, you don't reflect the demographics of Illinois, and you don't reflect the demographics of a lot of the residents that you serve. And so we want to do something about that. We want to grow the number of affordable housing developers and have that group grow to look more like the demographics of Illinois. And I know that the Federal Home Loan Bank of Chicago has definitely taken that to heart. And one of their voluntary programs that they've instituted is a diverse developer program. And we're also looking at doing something at IDA that would complement the Federal Home Loan Bank program. It's a great example of that partnership. But I think that's another dimension of the affordable housing need, is also growing that pipeline of developers that reflect the community.
Sure. And Sonia, it's going to seem like I'm picking on you because I'm coming back to you a second time already. But on that point, on that last point, is that something you think in the Detroit market that is a point of emphasis or needs to be?
I'm not as familiar with Illinois or the Chicago market in terms of the development and developer ecosystem. Here, though, I would suspect that if I sort of looked out across the country, I would suspect that Detroit actually has a bit of abundance in that area. One of my service roles locally, I am on the executive committee of an organization called the Real Estate Advocates of Detroit, which is a self-organized trade association that represents about 125 Black developers working in the ecosystem at all sizes. So these are folks that, have portfolios of single-family homes. They do rental development, so they really cover it nicely. I think what I would say in terms of a need for that population, so certainly the interest is there, the capacity is there, the technical capacity is there, but accessing the financing and being able to navigate in the capital market space, being able to navigate particularly in the different subsidy pools that you need to have access to do development in a weak market like Detroit. I think there are probably some real opportunities there. So I would call us kind of fortunate in terms of having that body of people, but maybe definitely some room for growing that capacity and growing that reach of those Black developers.
Perfect. You're transitioning me great. So thank you. We're so kind of pivoting a bit. So the banks, the Federal Home Loan Banks actually offer several core products and services to their members and housing associations. Chiefly, they have loans, which are called advances. They do mortgage purchases, and they have letters of credit. They also have some affordable products. And George, I don't know if you want to give us a little bit of a rundown from your experience of what the benefits of some of those programs are, and how they benefit members.
Sure, thanks. Excuse me. Far and away, the biggest product for the home loan banks and its members are the advances, where members are able to use housing-related collateral to borrow pretty much at will, at attractive rates, any time of the day, very conveniently. And so it's really a great system for member institutions and affiliates too, who do have access to it. But I think that typically represents somewhere between 50 to 70% of a home loan bank's balance sheet. So it is sort of the number one product. As you mentioned, Joshua, there's also a mortgage purchase program where member institutions can sell loans directly to the home loan banks, which has been around for about 20 years. I think it plays a nice niche role, but it really is pretty similar to what Fannie and Freddie do, with a few twists that are different, but it's not significantly different than what Fannie and Freddie do. And then, as you mentioned, there are a lot of programs that are somewhat smaller that are targeted towards affordable housing, community investment. All of those are limited to a degree, both in size as well as the contribution of the banks. So they're not as available as the advances to members. And so there's some constraints there. So I think that covers it to a large degree. I don't know if I added anything to what you laid out in a shorter period, but that's sort of my assessment of it is advances are the number one product. And there are some ancillary products targeted towards community development and affordable housing, but they are smaller.
Yeah, so with that in mind, Joe, can you give us some thoughts on do the banks offer the right mix of products and services to their members? Are there market segments that are well served by the products, or are there gaps?
There are gaps, and there's more that we can do. I think it's important to look at the fundamentals of the performance of affordable housing assets over the past 35 years, and you'd find that this is a very strong category of loans, investments. It performs very well, better than many other types of real estate assets. So I think that from a credit perspective, we should keep that. First, we should keep that in mind, and I think that CDT's 25-year experience certainly supports that. We've had stability over the 25 years. We pay our dividends to our investors on a regular basis. We've been very consistent with that, and our portfolios have performed well even during the most difficult times. So. And I'll also say that I speak from our experience in multifamily housing, not single-family homes. It's not something that we're involved with. But there are some things that we could do to expand upon what has already been done. The products that George mentioned, we've taken advantage of the opportunity to borrow, as I said earlier, $160 million from the Federal Home Loan Bank of New York. That's impacted 4,000 units in a positive way. But we think that there are a couple of things that can stretch the products a little bit more without adding a lot more risk to the system. And I'll give four specific examples of that. Number one, I think that a large portion of the affordable housing production is financed by unrated tax-exempt private placement bonds, which actually carry almost exactly the same risk profile as the mortgages that we already pledge as collateral. So I think that that's something that we should look at very closely. We've been working with our colleagues in New York at the Bank of New York, at Federal Home Loan Bank of New York, and discussing that. Some of the banks already accept this and that collateral, and I think that we should look at that as being, it should be consistent across the board, number one. Number two, we should look at the advance ratios to the extent that we could increase the advance ratios, in particular for CDFIs. If we make a $10 million loan and pledge that as collateral to the Federal Home Loan Bank, we can borrow $7.5 million. And that's great, and we love that, and we want to continue to do that. But that $2.5 million for a CDFI is that we need to provide. That's challenging for us to raise, and I think that we should. If you look at all should come back to the performance of this particular asset class, and if you look at it from that perspective, from a credit perspective, we think that the advance ratios could better reflect that. There are subordinate loans on some large transactions that could also be used as, should be used as collateral for borrowings. And we could go through the credit risk associated with those and discuss that as well, but we think that that could work. And the last thing I'll mention is the borrowing terms. CDT's mission is to provide long-term capital for the preservation of affordable housing. We do that through lending and investment, but on the lending side, both the lending and investment side, We think it's important to do that because long-term capital promotes the stability of quality ownership, which is good for the residents at the end of the day. And I think that that's really what we should be focused on here is how do we use these products to improve the quality of life for the residents of affordable housing. So longer terms would be extremely beneficial to affordable housing development and preservation. So it's really those four things that I think that we should be thinking about as opportunities to stretch a little bit further. We think that we can make a strong argument for including those topics, those issues for discussion about expansion of the activity. We'd like to talk about that more. Those are where some of the shortcomings are, I think.
So, Timothy, you spoke about experience with multiple Federal Home Loan banks. So I guess from that vantage, what were you kind of seeing as kind of the issues of were there differences that between the banks that you found problematic? Were there challenges that some of them offered some products, some didn't? What were your takeaways there?
Sure. I think that the basic framework of the FHLB System Bank is quite identical. So they have the big, that objective they're trying to achieve, but by different FHLB banks has more products. So for instance, FHLB Indianapolis not only just have that affordable housing program, they do have the repair related to products called the Neighborhood Impact Program, Home Ownership Opportunity Programs, and then the Accessibility Modification Program, which that some of other FHLB banks do not have. So like sponsor and the members, they really need to find out what FHLB banks are providing for that type of a program, which can be benefited for the related parties. I want to just go back to what Joseph mentioned about some of the a different structure in the collateral and the credit quality criteria. I think that can be coordinated with FHLB that you're working on. I haven't dealt with the FHLB in New York, but typically if I have some kind of a case which doesn't fit into the specific credit or collateral guidelines of FHLB Indianapolis, I'm just trying to talk with the responsible peoples and then trying to see how we can come up with a modified solution to fit into that case. So I think the key to the success is trying to coordinate with the responsible people, see if there's any regulatory or compliance boundary that we can just work around it, and then we can find the alternative solutions to meet that needs.
Okay. Kristen, any kind of add-ons that you want to bring to your experience with the Chicago Bank?
Sorry, my mind's going in a couple of different directions. I think that I will just wait. Thank you. I'll just weigh in and say that we have a large network of CDFIs in Illinois, and so we do think that they also are part of the affordable housing finance ecosystem, and increasing their ability to maximize their access to the Federal Home Loan Bank is something that we think is definitely worthwhile. And so I would just weigh in right there with that and say that, again, our Federal Home Loan Bank has created some additional products, again, on a voluntary basis. Federal Home Loan Bank of Chicago, actually, the board dedicated a $50 million kind of loan pool for CDFIs that has done very, very well. But that, again, that's a one-off program. So the other message I would say is that the core programs that come out of the Federal Home Loan Banks are really important. They fill those financing gaps, whether it's down payment assistance or on the multifamily side. But the ability to continue to have to fashion and listen to the local credit needs of the community, and then be able to fashion programs and products that respond to those more local needs, more regional needs, I think remains really, really important. And I'll just finish by adding on to, but Timothy, here listening to Tim Ha, Could we do more to go around and share with each other, the different federal home loan banks, hey, we created this NIP program. Here's how it works. Here's why we think it's good. Here's how we did it from a risk management perspective. Here's how we did it from, other perspectives. And Chicago could go around and share its program, its investment in CDFIs. Perhaps there's an opportunity to do more of that, but I think that regional customization is really important.
So George, from your experience in the system, what do you think has kind of kept the system overall from kind of working to address some of the gaps that have been already identified?
I would agree that those gaps do exist. I'm not we anymore. They are risk averse, overseen by a risk averse regulator. And you put those two together, and the wiggle room is limited to adapt to new initiatives, new ideas. And I think that's unfortunate because it's been that way for a long time, and yet the risk profile of the banks has changed enormously over the course of certainly the last 10 years, when things were a little bit on the bleak side, to a position today where the banks have abundant retained earnings, abundant earnings, and I would argue the ability to take on risks in some form. Now, how that takes place, I'm not going to speak to that directly, but I do think there are some mechanisms where incremental risks to address the local needs are possible without jeopardizing the performance of the banks. So that's something that I think that we should tease out as we have this discussion this afternoon, because I do think it exists on many fronts and could accommodate some of the things that are coming up around the table.
Yeah, so Sonia, you mentioned an unmet need for scaling single-family and for sale development. What kind of product do you think would be helpful in kind of doing that? Like what could be structured to support that better?
Yeah, if I may just take 30 seconds or so just to provide context. So Detroit is, we hope, at the very tail end of a 40-plus year population decline. And the way that that's happened in Detroit, it's left many of our neighborhoods with vacant homes, vacant lots, and many of these neighborhoods are incredibly strong. The housing stock that does remain is quite frankly, despite it being old, is quite frankly attractive to folks. We don't build brick homes today the way that was done 40, 50 years ago. And many of these neighborhoods were also kind of oriented around the idea that all of your needs, all of your amenities were within a 15, 20-minute radius. And so you'll have neighborhoods that have not just single-family homes, but multifamily housing stock, as well as commercial, small-scale retail. And so the nature of many of the Detroit neighborhoods really does kind of skew toward this modern idea of particularly young folks moving back into highly walkable, dense neighborhoods. But you have these holes in the physical landscape. And so we have found organizationally at Develop Detroit the best way to address that is minimally at a block-by-block level. And so it doesn't help us from a production or scale standpoint to sort of stand on a block and say, okay, we're just going to do one house. What we prefer to do and what we've done in the past is to scale that up to several blocks at a time, where you're going into a neighborhood and you're filling in all of the vacancy and abandonment at the same time. And not only is that more cost effective, but it also signals a significant change in the very nature of the neighborhood. So now, you can talk to people about this neighborhood is being stabilized. This is now a sort of a growth opportunity. You're signaling a different type of future to existing homeowners who may not have seen a lot of appreciation in their equity in previous decades. Well, that may be changing. We're actually, as an organization, we also think about layering on not just the single family work in that way, but we tend to do it in tandem with multifamily investments and in some instances, commercial investments. And so the challenge that we're consistently trying to overcome is where do you go for lending at that scale as single family? Like, it's pretty clear who I go to for my multifamily needs. We have wonderful partnerships with our local CDFIs. LISC is a really important partner to us as an example. But where do you go when instead of just wanting to do a single family development where maybe I just need a mortgage, right? To I need to do 30 homes and I'm gonna do them all in the same 9 to 12 month period. No one wants to lend us that type of capital, right? And we've successfully gotten over some serious obstacles in the past. Like, I can credibly say to lenders, you're not going to have an appraisal problem, whereas 7 or 8 years ago, that would have been a major stumbling block, right? Like, we have enough demonstrated data in the strategy that we know we can overcome a potential appraisal problem. And so, so it's that kind of pre-development acquisition capital at risk that needs to sit in that type of project, let's just call it a 25 or 30 home development project. Some of it new construction, some of it renovation, sort of blended depending on what the neighborhood needs. And your risk is that you're assuming the development risk, but you're also going to assume the back end sales risk, and we just don't have a partner who's prepared to take on that at any scale more than I'd say 2 or 3 homes. So so that's if I had a Christmas wish list for the capital markets, that would be pretty close to the top, if not the top of the list.
Sure. So let me open it up, see if and hey, remember everyone, you can turn those placards if you got a thought. Let me open it up, see if anyone else has any thoughts on that, because I think that you're speaking to something there that I think is the kind of the scars of the housing recession and like what happened in the development world after that occurred. Linda, why am I talking? You talk.
That's okay. Thank you, Sonia. That was helped me to remember 20 years ago on a particular block in Detroit. It had 7 abandoned homes, which we were able to acquire. And today there are 40 single-family homes still standing on that block. And just what you said, it was difficult at that time to find someone to do the financing on the back end. We were able to do it with home funds from the city and the state of Michigan. The actual home to build at that time was $120,000. So we were able to get $60 in subsidy, and they could get a mortgage for $60. And we had a bank who worked with us and did the construction financing, then made it permanent mortgage. That worked. Today, I can't find anyone, as I'm looking to do more single-family homes, to help fill those gaps and to come in and be on the back end once we built it and for sale and the appraisal. Appraisals are still kind of scarce, but once I started building those homes, the value increased. So then it wasn't a problem. So, yeah. But we still have the problem today as we launch out to doing single-family homes.
So, Sonia, I'm going to let you get right back in there, but then Timothy and then Tony.
Yeah, just super quick, because this is one of my favorite factoids. In the last 4 years, my organization has renovated or built 28 homes in a single neighborhood, every single one of them appraised at or above the target list price. So I'm very proud of that because I was told 5 years ago that Detroit had this insurmountable appraisal product and problem, and it turns out that there may just be something to the strategy of doing it all together and just changing the complexity of a micro neighborhood at the same time that allows us to overcome that issue.
Yes, I want to address the one of projects that our bank is currently working on. I think that it's hitting to some of the points that Sonia just mentioned it, because we noticed that there's a disparity between the rental and then the ownership developments. Obviously, FHLB has both programs that is supporting that the rental and then home ownership, but mainly that from the news media that we can see that the multifamily that support is being like headlines, and then not many that ownership developments on the news line. So one of the projects that we're working on is we are building, a bank is actually the developer, and then we are the builder for the 20 single-family units, because we couldn't find the developer that appropriate to lead this project, so the bank end up being developer. And then we are trying to bring in the subsidy funds from Michigan for like 1.2 million, and then also the new market tax credit about 1.5 million, and then bank is financing the 50, which is about 3 million. So we are trying to overcome the appraisal issue and the lending issue, and then also we're trying to focus on the ownership development instead of the rental. So we are working on the multiple projects, but those are the points that I know there's a lot of the developer in the city of Detroit, but there's a gap between. So which is really large developer, there's a small developer. We couldn't find some developer, it's in the middle class, to handle the feasible projects. So that's why that bank is end up being a developer. And we are trying to work with the FHLB in Indianapolis, trying to bring in the gap funding or the AHP, that funding, trying to help the single-family units, the owners. So that I think that it's just kind of we need to work on how to work it out, because I mean, problems prevails, but we really have to work on some of the cases that how to resolve the issue, and then trying to reach the end goal of trying to have the ownership developer happening in the city of Detroit.
Tony, and then we'll come over to Don.
You know, I came here with a lot more questions than answers for you, and I thought this was the time to bring out my first question, because, you know, the advances that Federal Home Bank System does is a reason for membership. That's their core business, and the more they do of that, the more money they make, and that really generates revenue for a lot of the programs that many of us deal with. And one of the questions I have is, how do we help them be more profitable so that there is more revenue for these activities? I don't want that to be lost as we're looking at this, you know, roundtable of Federal Home Loan Bank System at 100. Because, you know, maybe there's the next 100 years it will look different. We've heard some good solutions here from the Community Development Trust, which my new friend, and I do like the way he's thinking, because if you add up the balance sheets of the Federal Home Loan Bank System, it's significant money. It's got to be over $1 trillion, perhaps. Do you know off the top of your head how much is sitting out there at these banks? How can that be in the next 100 years transferred or leveraged, you know, into new class of members like CDFIs that are doing certain things? So can that become part of the profit center for the Federal Home Bank going forward, instead of, you know, dividing up a piece of the profits for their activities? I want to make sure that question doesn't leave the table. So I'm always eager to see them. When I was on the advisory council, one thing I always paid attention to every meeting was how well the bank was doing, because I knew that would transfer into more grants.
Well, so Tony went to a different place. I wanted to go.
Come on back around. It's okay.
All right. And I would love to talk about that too. But in the city of Detroit, we came out with a strategy called the Strategic Neighborhood Fund, where we leverage as a multi-force different investments into several neighborhoods in the city of Detroit, whether it's affordable housing, preservation, investing in the commercial corridor, streetscapes, parks, whatever. Essentially creating an atmosphere where people would want to live, right? And it's interesting Sonia saying that, because we have tapped her. She's been one of the only successful people recently that I've seen actually build new development, and we have a lot of land. And I can tell you that people and residents in the neighborhoods would love to see more single family. And we're talking about the missing rental for 60, 80% to 120 AMI. Those are people that I would love to make homeowners and be residents for the long term in the city of Detroit, specifically in these neighborhoods that people really want to be in. Looking at homes that are selling in some neighborhoods that even Sonia is working at it, upwards to $300,000 to $400,000, but yet we can't move forward to figure out how we can do some single-family new construction in some of our vacant areas in that space too. There needs to be some type of product for that, and I'm very interested in trying to figure out how we can do infill, because we have to figure out how to grow. So.
Yeah, I want to follow up on Tony's comment. The system is sound. It is strong. It has been profitable. And if we want to come up with a bold idea, take some of those dollars and invest in the entities that are represented here to allow us to grow, and it will in turn allow us to leverage more dollars to come back to you with more product. Speaking for CDT, I make an investment in CDT. We're a for-profit entity. There are ways to make investments with not-for-profits as well, provide some of that capital to not-for-profits that allow them to grow. But for CDT, pretty straightforward. We're a for-profit entity. You can buy stock in CDT. You can take some of those dollars that have been generated over the past few years and make an investment in us, which would allow us to bring more product to you at the end of the day. It's a pretty bold idea, I think, very different from things. Some of the earlier ideas that I mentioned are pretty straightforward and just expand a little bit upon what you already do. Here's one that's even that's a bit outside of the box, to say take some of those dollars and make investments in the entities that you want to support and bring you more business.
Yeah, so I think I see. Go ahead. Okay. We'll come back. So one thing that seems to be coming up is a little bit of discussion on, extending the relationship with what would be more non-traditional Federal Home Loan Bank members, so CDFIs. That's come up a few times. So George, I'm going to ask you, as the one at the table, your thoughts on why that's kind of been a slow build since CDFIs have kind of had access to the system for a while now. Why is it not more prevalent today?
Well, I'll put on my CRO cap for a bit, and there's no question that from my perspective, historically, we view those sectors of the market as being higher risk. And we've heard today, and we've heard over the course of the last 3 months at all the roundtables that there's not as much risk there as we people in the back office seem to think when we run our models. Things are non-standard, perhaps, in the affordable housing markets and community development. And therefore, they don't fit the model, so that when we try to aggregate risk, we see more risk because it's not standard. Doesn't mean it's true, but that's our experience. So can we, to the points that have been made really around the table already here, how do you experiment with that and get us more, or get the home loan banks more comfortable with the fact that it's not as high risk as it might seem? So to take that first leap into a higher risk arena is something that home loan banks don't do easily. And again, the FHFA, looking over the shoulders of the home loan bank management, I would say discourages to a degree. So that's a cultural shift that needs to take place, to say, let's go out and learn this. We've talked about local communities, people knowing their markets. What might look risky to someone in DC based on what Kristen might be doing in Chicago, might not be risky at all, or what's happening here in Detroit. Everyone around the table seems to think that there's quite a bit of value in what's being done here, and it's not as risky as I would think when I was chief risk officer in Boston. So I think that that's really needs to be explored. And how do you ultimately do it? Because the banks are risk averse. And the agency has a mission to not let the banks take on a whole lot of risk that could cause problems down the road. So that, I think, is, I have some ideas, but I'm not going to jump in right now. I'll use it for my closing comments, or I'll do some written comments if that should happen. But I do think that there's a real opportunity there for the home loan banks to get more comfortable with what's happening on the ground.
Yep. No, thank you. And I'll say, as the regulator peering over the shoulder, I've only been in the seat for about 5 months, so it was not all with me. Sonia, I think you were up, and then we'll go to Joe and then to Kristen.
George said exactly what I was going to say, probably better. I just would have said it, I was thinking it differently. I was sitting here thinking that the way this question was framed, it was sort of like, what are some new, one of the questions was framed as, what are new products or new services that could be offered that would help further the work? The way my mind works, I turn that into, we need to innovate. What are some of the innovations that we need to tap into for the next 100 years of the work? And to Joe's point, one of the more direct ways to do that is to just invest directly in the people who are innovating. But that's very much a paradigm shift, because now you're having to think about investing in leaders and leadership, and not necessarily thinking about a suite of products that might be one size fits all across different regions. And so I just found myself wondering, how does the system tap into this more entrepreneurial, innovative approach, way of doing things, where you might have to, like, you know, sort of invest in leaderships or leading edge organizations, and how do you square the risk around that to make it happen, if it's even possible? Because sometimes organizations are difficult to make those kinds of, you know, sort of almost core shifts in the way they think and do things. So I just, I love that prompt, and you and I were sort of thinking about things the same way, maybe with just different words. Yeah.
So I've had a long career in community development and affordable housing finance. I worked as a community organizer in the Bronx. I worked in New York City government for 6 years and 6 years. Then I spent 18 years at Chase and 17 years now at the Community Development Trust. So through the time at the bank as well as at CDT, 35 years, I spent a lot of time convincing credit people that this stuff is not as risky as you think it is. And there's a perception of that, and over time we've started to break it down. But now there is empirical data that we could provide through the performance of CDT's portfolio, which demonstrates that exactly. Is that, and we could go through the financial crisis, we could go through the concern about another financial crisis as a result of the pandemic, and look at how this asset class has performed. And I think that you'd see that this asset class is actually performs very well. It's not regular real estate. You shouldn't invest in affordable housing if you think there's going to be some big IRR pop at the end of the day. But it's slow and steady wins the race. It performs more like a utility, and we should be thinking about it from that perspective, that's the type of return that you're going to have from and the risk that you're going to have associated with affordable housing portfolios. Our experience, we will share what we've learned with anyone who's trying to do things that improve the quality of life for the residents of affordable housing. We're an open book. We'll provide that background. But I think that you'd find that this asset class performs well, and if you get, it may take some time to convince people in the right places of the FHFA and the individual banks. But we will spend the time using our portfolio and our experience to show that this asset class actually performs very well, even through the most difficult of times.
I was just thinking about things historically as well. I mean, CRA was passed in '77. The CDFI fund was created in '94. And so it just makes sense in a way. There's been 30 years of community development financial institution growth, and new asset classes have been created in that time. And you know, a while back, CDFIs were charged with grow, change, or die, and a big percent of them grew to substantial size. And there's mid-tier ones and there's small ones. So, I mean, when we talk about CDFIs, it's not like, you know, lend money to all of them or advance rates for all of them. But my question to you is, I don't know this. Does FHFA do its own research on new asset classes? Because what Joe's offering for his portfolio, but there's more data out there. And so I'm thinking about it, there's one piece of it that's around CDFIs, there's another piece around it that's around tax credit lending on with low-income housing tax credits, whether it's first mortgage, bonds, unrated bonds, rated bonds, second, you know, and doing a deeper analytical dive into these asset classes and realizing that, hey, this didn't happen overnight. This has been a 30-year plus historic development in the financial markets, and that it's time for the, you know, for the FHLBs to kind of, I think they have individually, but for the whole system to recognize it more deeply and acknowledge it, and then in turn, either increase advance rates or do something else, or create that angel investment fund, but that's pretty far out there. But I think they're all really interesting ideas. But it makes sense historically. Yeah, there's these new asset classes that haven't. We just need to get the data and the information out there.
Yeah. So Tony, one thing I would say that I want to come back to something you had said before. And pivot it a little bit. Obviously, the Federal Home Loan Banks do have some programs where they directly invest, but a lot of what's actually being done is by the Federal Home Loan Bank's members. And I think you were speaking a little bit to the difficulty of kind of engaging with some of the members to kind of get some of the processing done that you were hoping to do. Do you think that there's anything the banks need to be thinking about in terms of incentivizing their members to kind of join in on these issues?
So, as I learned a long time ago in community development, we've heard it here a little bit today, capacity has legs. It can walk out the door. And having a financial institution that's a member of the Federal Home Loan Bank system lose a certain executive or a high-level officer that had a passion for this and had some, you know, abilities to do that. If they go to another financial institution, I might consider going to that other financial institution. It's that much reliant on the people in it. And so to that extent, how does the Federal Home Loan Bank system, you know, invest in that part of the system? They can do things like Indianapolis did by opening up like a Detroit office, which has been rallying projects, and then I think matching them with financial institutions that might want to do it, so they could do something like that. But I do think there could be some relief created. This is me and my Christmas tree list, if I were to do that, but help with the backroom operations, you know, of compliance and things like that. Some of the smaller financial institutions might have to take on, and you know, that can be daunting, especially if it's a small community-based CDFI or something like that. So maybe there could be some technical assistance or some sort of grant operation that kind of helps that out. I would certainly think that would be a key because you see that happen more often than not, that we try to find the financial institutions to shepherd through the application based on them doing it before, and you know, the bank having an ability to actually take on that role. It's not easy. So,
Well, I thought about two things on how we, I mean, we're going back to the discussion on what we can improve on and what needs changing. First of all, one of the things I love about Federal Home Loan Bank in Indianapolis is getting a local office here, and so they can be really in tune to what we're doing, right? It's almost like you can't work in the city of Detroit. I don't know about any other city without knowing the initiatives and the directives that we're going. I mean, how can you be a bank lending when you don't know where the city of Detroit's putting their $800 million of ARPA, right? Or where the state of Michigan is moving legislatively and moving billions of dollars of ARPA in different cities and what projects they're looking at, how their, MSHIS programs are working, right? And so you have to be in tune with that, and I think the only way to do that is physically put someone there. When I heard that Anna Shires, for instance, who worked with us for a minute, was going to Federal Home Loan Bank of Indianapolis, I was ecstatic because, now there can be some synergy and connectivity to the people who lend, and we can be on the same page to be more impactful and effective at what we do. But I also, going back to George's point, I was just listening to what he said about the mission and making sure, that the bank is, financial healthiness, right? We want to make sure they're in existence and can do the work. But I know when I read the website, they talk about some of their mission is to ensure, home ownership and help provide equity amongst Black and brown communities, things like that. And I wonder if you guys are really chasing your outcomes, not necessarily looking at outputs, right? Are you do you look at are you guys closing the wealth gap between Black and brown communities, right? Are you reducing poverty with your products? How is your products helping be really impactful with outcomes, not necessarily outputs? I gave these many loans in a year, but how are you changing people's lives, right? And I feel like sticking in that mission-based focus really helps guide your principles and makes you understand the risk that we are trying to look at. I'm not sure if we're actually making our mission, right? And really looking at that. So I would say that, and also would really be interested in how much policy and research that Federal Home Loan Bank actually participates in. I think about some of the rule changes we made at the state level. One thing I do appreciate about the mayor of the city of Detroit is that he's into changing law, right? Legislatively, how are you creating policies to help improve the advancement of the mission that you're trying to do? I was talking to Tony right before this conversation started and talking about how there's a miss for NOAA, naturally occurring affordable housing. Most of the people who provide everyday affordable housing in the city of Detroit and states are just regular private people, right? Who don't receive grants, they don't receive tax incentives, they don't receive any of that. And also goes to the quality of the housing that they provide for our residents. But recently at the state level, they just passed the ability for municipalities to provide a pilot to people who are, naturally, you don't have to have a LIHTC, reservation or take a federal mortgage anymore, right? That change right there has shifted the landscape more than any dollar that you guys can provide, right? Dollars are not necessarily going to be the thing that change people's lives. And so thinking about it differently, getting into policy and research and seeing what things you can change can go a long way, even more than providing someone a loan for something, but also sticking within the mission and really chasing outcomes, like how you're changing the environment for people, I think is really, really important. Are we increasing the wealth for Black and brown people? It's what are we here to do, right? And I think that we have to make sure we're always looking back and coming back to that point.
Oh, there's so much there that I wanted to follow up on. But first, I did just want to echo on Tony's point about what I refer to as relationship management within specifically the Indianapolis system. Bank consolidation has been sort of at my firm. We rely on the AHP grant. That's an important tool for our work. And bank consolidation has really been tough the last 5 years. Every year, my team, there's this window every year where we look around and the prior year's bank relationship for AHP doesn't exist because of a bank consolidation. And so we have to look at the list and figure out who we can get to and how do you build a relationship in so much time. And then hope that they have someone on their team who understands how to deploy this grant. It really is an annual effort for us, and I don't know. I don't know what would happen if there wasn't the Detroit office. Anna Shires, who occupies a seat, really does help facilitate that. So I just wanted to lift up that there's this, to this point that sometimes it isn't just money. Sometimes it's sort of policy or the way that the process works, and bank consolidation has been pretty tough, at least in Indianapolis with the AHP program. And then, I don't know if we are going to spend some time on this notion of outcome-driven policy, but I have some thoughts to offer to that as well.
Okay. Well, we can certainly come back around to that, because in the back half, we are going to be talking all about ideas on what products could be offered by the banks or what solutions they could be bringing to the table to help fill some of these gaps. So we can come back around to that point. So Timothy?
Yes, I would like to echo that Tony and Sonia's points, because that's been the challenge for a local community bank like us, because this NIB, HOP, and programs, we are registered as a participating bank, so that people are calling us to how to apply and how to get this grant. However, like for instance, that this week we got the 7 calls from about this program. Only 1 customer is an existing customer. Other 6 doesn't have any banking relationship, but they want to apply that grant through us. At the end of the day, I don't want to be so greedy, but we don't have any revenue out of this processing the application. They will get the money, they will deposit the money to another bank. And then we are going to go through the operational burden, so that keeping that record retention and then monitoring. So I think that is our challenge. I mean, we don't want to like shut down the customers that inquiries, but at the end of the day, we have to find out how to generate the revenue out of this for greater goods. So I think that's the reality that we are facing, and then our bank is trying to overcome the challenges.
Okay, I think that we're at a good point to take our midway through break. So we are going to stop for 20 minutes. So please be back. Well, let's call it a couple minutes. Well, I don't know. I'm not going to do that math well. We'll figure that out after they take me off camera and I don't look like an idiot. So, yep, that's it. 2:40. So please be back by 2:40. And we'll continue the discussion. As I was saying, the back half is going to be all about what could be offered, what could be done by the Federal Home Loan Banks, product services-wise, to really kind of get to some of these issues that we have been discussing so far.
Thank you.
Thank you. Okay, and welcome back. So right before the break, we had gotten into some discussion about being kind of focusing on outcomes. And one thing I wanted to return to as we're getting back into this discussion is how should the Federal Home Loan Banks think about the way that's documented, or they're evidencing that that's what they're doing? Like how is that kind of shown? Like, and Don, I don't know if you want to take a jump at that.
No, I appreciate that, and the reason why I said that was, like, as I said before, I was reading the main website and about the mission, right? And so how do you know you're accomplishing your mission, right? Like, that's like my biggest question for anybody who's doing a job every day. And so, thinking about looking at, one thing that we're looking at right now in the city of Detroit is like, how are we increasing home values? Are we increasing just values for Black and brown residents of the city of Detroit? Are we reducing poverty through our investments? It's interesting that Linda is a rock star in what she does with home repair, creating that stability in our neighborhoods. And I think we have to be more coordinated with what we do, because we also have a lot of people who provide funding for repair grants and the like. But some people do facades, some people do roofs, some people do plumbing. It's all needed, and it's not enough money to do all of it. But you really have to make sure you've come to a conclusion of whether you're doing your job, right, and accomplishing your goals. And so I think, chasing that information and tracking it and doing the research it needs to really find out if you're moving the needle is important. So that's what I said. I thought about like the racial gap and value gap. These are things that people dig into every day. And if your mission is involved in that space, then you have to chase that and see if you're actually impacting that in any way. And we understand outcomes, and you have to be able to tell your boards and the people that you're getting the work done. But I think it's also important to see if you're really changing the system, and what you're doing is changing the system.
Joe.
Impact metrics. We need to develop impact metrics. It's hard to do. It's hard to make them right. They need to evolve over a period of time. But we're in a business. Our missions are very much aligned. I think that we would agree upon that. But this is not just about. It's not just about money. It's not just about the bottom line. It's not just about how much money our company makes, or how much the system makes. At the end of the day, it's about people. And what we need to keep in mind is the impact on people. The financial decisions that we make impact people. And I think that whenever we're making a financial decision, we need to ask the question, how does this impact the residents of the properties that we invest in or lend to? And assess then what is we should be moving towards improving the quality of life for people, and we should measure that. It's not just dollars. We can demonstrate the economic outcome of the work that we do. What we need to spend, and I'll include us, CDT, in that category. We're always looking at how we can more effectively measure the impact of what we do, not just the bottom line, but what is the real impact on people. Now, keep in mind that if we don't have a bottom line, we won't have any impact on anyone. So it's not that we should dismiss that. It's a very important part of what we need to do. In the words of Sister Lillian, who used to run Mercy Housing in Denver, no margin, no mission. If we don't make money, we won't have any mission. And I think that we probably all need to spend more time measuring the impact of the work that we do and the improvement in the quality of life for the residents of the properties that we lend to and invest in.
Does your organization have examples of that we might look to, or that the banks
Sure.
might look to?
Yeah, we do. And on an annual basis for our board, we prepare an impact statement. And we're always looking for ways to improve that. So the impact metrics, it's not as easy to measure the impact as I'm describing as it is. It's very simple to look at the bottom line. Oh, okay, here was here was our net income, right? We can figure that out. We can figure out the math. It is more challenging to make sure that we're taking the work that we do and then also looking at the not just the bottom line, but looking at, does this really make a difference? And I think that we should always be, in our business, we should always be asking the question. It's not just what is the best economic decision. We should be asking the question, what is the impact of this decision on the residents of that property? At the end of the day, how does this, if I choose to foreclose on a property, what does it mean for that? If I choose to sell this property, what's the impact on the residents? And we should be asking that, we should be asking that question when we're making those financial decisions.
Chris?
I believe in impact metrics. I believe in looking at outcomes, not just outputs. I would maybe say two things. One, some of that work is bigger than just the Federal Home Loan Bank. I think it's the challenge of the whole affordable housing finance ecosystem to come up with some of those metrics and figure out how to get at them. Because one thing that the member banks, the member partners, the developers, nobody needs is more kind of more paperwork, more answering, filling out more forms, more regulation of AHP, more, whatever word we want to use. But yeah, yet another report to fill out, right? We're trying to keep this streamlined, opening up access to maybe the next rung of developer who isn't as sophisticated as the big light tech developers that have been doing it for 20 years. So that's one piece of caution. And then, and the second, and we'll go out for later and we can debate this, but like we know, there's been data that shows home ownership is good for kids in school. It makes, they do better, and so we also know that, for example, Black home ownership, it's not like home ownership just automatically builds wealth. We know that the age you are when you get your first home, there's been studies for African American home ownership matters. The younger, the better, right? It gives you a chance to build equity. So if you were able to run a program that showed your average age of, your home buyer, and your, say it's African American home buyers, went down, to me that should be enough. You have your model, you have your research, and then you have your simple data about showing what you're doing. So, again, this is a much longer discussion, but I would just say we got to think about outcomes, but let's be really thoughtful about how we ask people to deliver the data to measure it, because it could be too much.
Sure. So before we move on, George, what do you think about as a former representative of the system, of the kind of thinking within the system on this front, like in terms of looking at outcomes?
I'm drawing a blank on that one, Joshua. Just not close enough to that on a day-to-day basis to give you or give the group a whole lot of feel.
Okay. No problem. All right. Oh, Sonia. Yeah.
So I would also say, and why this is difficult work, right? And this is us, finance people sitting around the table too, thinking about social impact issues. And what I would say that that's why we try to hire University of Michigan to run, studies to say if the work that we're doing is
University of Illinois,
accomplishing
University
the
of
goal.
Michigan.
Yeah. Detroit Future Cities, Anika Goss-Foster does an excellent job in really researching the impacts and where we're missing tools for the city of Detroit. So it's not necessarily, I can tell you that I do not want to put any rules and regulations over the people that I give money to get the work done. But I do need to have somebody telling me the truth of what the work that I'm doing is actually accomplishing goals. And so it doesn't necessarily have to be within the burden beyond the ones that we're giving funding to, but it could be a think take outside to say, this is what at the end of the day you're accomplishing, right? Because if the bottom line is your goal, then I think the mission statement on the website should say, this is my mission, is the bottom line. So.
Okay, so Sonia, Tony, Joe, and then we'll move on to the next step.
I think I want to push a little bit harder on this point that Donald raised. Just because something is difficult to measure doesn't sort of give an organization or a system a pass at attempting. And in a former life, I was a Wall Street investment banker, so I have more than a passing familiarity with banks and with capital markets. And banks are really in the business of measuring, right? I mean, this is sort of classic, right? You can't manage what you can't measure, and whether it's risk or bottom line, I mean, it's just innate to a bank and to the banking system to measure. And so I just sort of struggle to understand why that same philosophy, approach, process can't be applied to impact. And no, I don't think that we'll ever sort of get a perfect measure in a discrete point of time of the range of impact. But let's face it, there is almost no system that has greater visible and hidden impact on individuals' lives than the banking system. And so I agree with Donald. There should be some attempt to capture some portion of that, right? Like start small, start here, like figure out what should be a goal in affordable housing that is beyond just impact, maybe something that gets at a community level. So I just would push back a little bit that I think that if there is a system that is really good at measuring and measuring complicated, arcane things, it is the banking system. And so I've just pushed back on that a little bit.
I told you I came with questions. This is my second question. When I started, sorry, I thought I had it done already. This is my second question for you guys. When I started at the Traverse City Housing Commission, there was, some controversy and turnover with the previous director, and I quickly found out that we were a high-performing public housing authority. And guess what? Nobody cared. The mayor didn't care. The city commission didn't care. The community didn't care. But I had a gold star from HUD. And the question I wanted to ask you is, can you have sort of a high-performing federal home loan bank that's totally irrelevant to the communities it's supposed to serve? And that's the point of this part of the conversation is, can you make the federal home loan banks matter in those communities by asking these kinds of questions? I know it's difficult, and I know they can't serve everything to everybody, but this is kind of changing things. I quickly abandoned the need to try to please HUD and started trying to please our community and start building, addressing residents' needs in a different way and all that kind of stuff. I think it's possible. It's not easy. I don't think necessarily that I'm the model for that, but I really do think this is something you, as the regulators, have to ask that question. Can you just exist and get, a good pat on the head from Washington, D.C., or can you help be part of the challenge?
There's a lot of research out there already on the benefits of affordable housing. Kids do better in school. Kids are healthier. The stability of a home, of a base to call home, is beneficial to families. There's a lot of research out there that already supports that. I'm not suggesting that we need to reinvent the wheel here. There are ways to look at the work that we do and connect the dots to the mission impacts, without saying we need to recreate an entire measurement system. There's some of it that's out there. I would say that the Harvard Joint Center for Housing Studies has done this type of research. There are others as well. So there's data out there that supports the benefits of the positive impacts of the work that we do. We can always improve upon that, but there is a base to turn to before we say, okay, we're gonna start from scratch. There's work out there, there's data out there, and we can use that.
All right, thank you. Now we'd like to move to discussing the products and services the banks might offer. And we wanted to start by getting your thoughts on where are there opportunities to increase Federal Home Loan Bank support for certain either market segments or member types? And to the extent possible, if you could be specific, suggest either specific products or strategies. Linda, would you have some thoughts on that?
I was sitting here thinking, well, in Detroit, we work with First Independence on the NIP. And so when I reach out to other members of the Federal Home Bank, they're not doing the NIP because they don't have the staff to provide the work that takes place. So for us, it would be, how can we get them the help that, not necessarily staff, but it's a lot of backdoor operations that have to take place. And if we could connect with them, there are other CDCs in Detroit that could work with them, and we could train them to provide what we do. And it's for First Independence Bank, they do the gives. I mean, not to talk about what happens there, but we do all the other work. And it's been working for 15 years. So it's been working for 15 years. And the way that we look at measuring, we have stories, we share stories with Indianapolis of some of the success, some of the homeowners that have received the grant, which prompted the gentleman to get a roof. And today he's got a fence, he's did siding. All he needed was a jump start to get started. And so I would say one of the products is trying to get some of your other members, and I'm not sure how their approach to do the NIP or the HOP or whatever the programs are, getting more involved because the need is there. And holding them accountable as a member of the Federal Home Bank, what are you giving back to the community?
I like that question, yes.
That's, yeah.
Timothy?
Yeah, I think that I mean, we truly value that that cooperative partnership because, like as I mentioned before, sponsors, members, and FHLB those are we have to create the cohesive alliance to meet the customer need and then trying to make difference. So I think that that's kind of a partnership that we are pursuing and trying to generate the greater outcomes. One thing that I want to add is that application, just like Kristen mentioned, that application process, yes, it requires some resources and then some our allocations that for local community bank, that not only just the AHP registration, but also there's a AHP application and a NIM HOP application that we need to spend time on to apply. Hopefully that we can have the more streamlined, a shortened application process to process it efficiently. I'm not trying to compromise any regulatory or the compliance requirements around it, but at least that we can take a look at it, trying to how to just shorten it or to streamline the application process.
Thank you. Joe and then George.
With regard to affordable housing loans, be consistent across the system. If one can get comfortable with it, presumably the others should be as well. And I think that you can play a role in making sure that they're comfortable that, that any one particular decision is acceptable. Unrated, I've said this before, I'll say it again, unrated tax-exempt private placement bonds. I think that's the low-hanging fruit for you at this point. Allow that to be used as collateral, same risk profile as what you're already accepting. Increase the advance ratios. It's very difficult for CDFIs to raise capital, and we have to be very, very careful about how we use that capital. The more we use up on any one particular transaction, it's a zero-sum game. We have less to use on something else. It's hard for us. We don't have a deposit base, and I acknowledge we don't have FDIC insurance either. But the credit risk is acceptable. Longer terms. long-term capital is good for affordable housing. It's good for the residents. It promotes the stability of quality ownership over a period of time, longer terms. And while the term subordinate loan may raise some concerns on tax credit deals, there can still be an opportunity to provide subordinate financing to the first position loan, which is still ahead of a substantial amount of equity which comes in through a low-income housing tax credit investment. I think you should take a look at that as well. So those are 4 areas where I think that you can focus on. It's expanding what you already do a little bit. It's not these are not bold changes. I don't think it's a recognition of what's already out there, what's being done, what can be done, and expanding your comfort zone as to what would be acceptable at the end of the day.
Thank you. George, and then also just to expand your thinking in this area, are there types of loan products that could be offered but aren't? George?
I think this is the question that you provided us ahead of time that also had the parenthetical without changing the resources very much, which I take some exception to. I think that is a really necessary component for the banks going forward. I hear what Joe was saying, and we sat over lunch too, and he has a lot of really tangible ideas that make a lot of sense. But I think the impact of them would be pretty marginal. They might move the dial a little bit, but I don't think they're going to have a significant impact on how community banks work with the affordable housing community and work with the home loan banks to make a significant difference. I think a significant difference is achievable. So is there, and maybe I shouldn't steal your agenda from you, Amy and Joshua, I don't mean to at all, but can you
Going where you're going.
leapfrog beyond tweaks to advance rates of 75 to maybe 78? I mean, does that do anything, or do you want 95? 95, I thought, yeah. We'll see if
Directionally, yes. Anything that you can do directionally
is helpful.
Improve them it makes a difference. You're absolutely correct that the difference between 75 and 78 is not going to move the needle.
Right.
It's got to be more substantial than that.
Yeah.
But the bonds, I would say, those are larger transactions that can have greater impact, and there are a lot of them out there.
Right. We saw that a little bit back when I worked in Boston. Yeah. So I would just raise that, and I won't go any further than that right now, to just say, is it incremental? Is there anything that we're just missing that's just sitting on the table and can be seized, or do you need to think differently?
Okay. Donald and then Kristen.
Sure. So I was thinking about this and just not even thinking about the money that the city has dedicated to ensure that our light tech projects work with increased construction costs we talk about and we spoke about earlier and increased interest rates. But right now, $100 million at Mischief for Missing Middle, $100 million also dedicated for Mischief for 50% AMI projects and also permanent supportive housing. $150 million that just was passed recently for GAP products for light tech projects that are going to start putting GAP money to pass through projects, which is the first time they've done that and since I've seen and worked with MISHDA. Money provided to 9% and also their 4% preservation direct loan program. I think the question to me is, with that influx of money, is like, what is the Federal Home Loan Bank of Indianapolis going to do to like come into that space and be effective and help those projects move too? That's differently than the normal GAP money that you provide, because right now, to me, with the money on the table, I think that people are thinking through how we can address those gaps for those projects. So what's the next financial tool that you can bring to the system, I think would be important. When I talk to regular, everyday developers, black and brown developers, it's a lot of assistance as far as like products about guarantees interest rate buy downs with the interest rates being so high. The city of Detroit started the Detroit Housing for the Future Fund with, I see Vic. So the Detroit Housing for the Future Fund, where we fundraise for gap money and also just low interest capital, right? That product is almost running out, and we need more. We're going to start pushing to get more of that funding. But that product, you could tell, was desperately needed within the city of Detroit for sure. So just thinking through outside the box, because I don't know if the normal products that you have, especially with the influx of funding, and we're going to be chasing more money for GAP, for MISHDA, and MEDC has a RAP program where they're providing additional funding for development projects as well. So it's like, where do you all fit in with the changing landscape based on the additional inflow of government funding coming in to help projects move forward?
Okay, thank you. Kristen, and then Tony.
I love Donald's question that he just asked, because one thing I would say is I do think that there still is untapped potential to work even more closely together with the housing finance agencies. MISHDA is the Michigan's housing finance agency, WIDA in Wisconsin, Indiana HFA, because there is all this there are huge amounts still of federal dollars coming in. And so we don't have the specific answer right now, but it's a new landscape, so maybe it does need something different. So that's one thing, is to work more closely, have more conversations with the HFAs. I also think, there's grants and there's loans, right? And they're both needed, and some are to the customers, but to the members. But I do just want to say we do have a fundamental housing crisis in this country, and still the fundamental need to make all that housing happen is grant money. So your core AHP grant money is really, really important. But with costs, literally, we just did a survey, construction, between the costs of materials and labor, 30%, 35% cost increases over the last 2.5 years. And that even includes some prices coming down again. So for the same amount of AHP dollars, you're going to get fewer units created or rehabbed. And what does that mean? While I think new loan products are really important, and I'll leverage off of one idea there, I do just want to highlight one of the beautiful things about the Federal Home Loan Bank system is that they do allocate 10% of their earnings into AHP and these grants that are so desperately needed to make our projects work. Tax credit projects and other types of projects too. So I just want to acknowledge that. And then last, and I know you have heard this at some other roundtables, because I know a Chicagoan raised this, but we too see it, which is the example that Sonia gave about she's having trouble finding financing. She wants to do 30 lots and 30 houses all at once. How does she get her financing for that? Maybe she's having more and more trouble finding a bank that would do it, it sounded like you were saying. So I do think there are opportunities for the Federal Home Loan Bank to think about credit enhancement, credit enhancements. How do you get the banks? How do you get your bank members to make that loan? There's an opportunity there to create some credit enhancement products, because sometimes there's a risk of real loss, but sometimes there's just the perceived risk until the first house sells and the appraisal does come in where you need it. And all of a sudden, what you have that credit enhancement for is not needed because it did appraise out, and so that's products that are around credit enhancing, I think, are something to be looked at and how to leverage the Federal Home Loan Bank strength there.
Yes, thank you. And I did not mean to limit it to loan products, but trying to think about sort of the core business rather. Certainly, we understand the value of the grant programs. Yes. Tony.
So this is an area where I get a little confused of what Federal Home Loan Banks are allowed to do by statute versus what you allow them to do with your agency's oversight. For example, in Michigan and several other states, public housing authorities, we can issue our own bonds, right? But nobody would buy them the way they're statutorily written unless we had some sort of partner. But I'm not sure if credit enhanced, I don't know if some of these technical things that we're talking about today are allowed under, authorizing language for a Federal Home Loan Bank. So I think that's important to kind of keep bringing up so that we understand where the real barriers are, because advocates can start doing some of this as well.
Well, please keep making suggestions, because even if it isn't, we
I
can
know.
make recommendations too.
Yeah, exactly. I just want to make sure that I'm conscious of that, and I just want to make sure, I've always limited myself to what they're authorized to do and not, what I have to ask Congress to do. I would also just point this out. It's important to realize, when we're working with the Federal Home Loan Bank out in the field, and what we do, they're often just a part of the operations of a development deal, part of the capital stack on some level. I can't emphasize enough that no matter what we do for the future, just make sure that it fits into the existing programs and plays well with others, because that's the worst case scenario. There is no place for any of us who do affordable housing. There's no one window, and I said it earlier, to go and get all your money to do your whole deal by itself. You have to have a whole bunch of people in there, and it's nice when some people know they're going to be subordinate in advance, or some people are going to be just there to assist in advance. Finding a role for the Federal Home Loan Bank system, whatever the program is, make sure that it just fits into that system overall, because it'd be a shame to, try to do something that doesn't actually help. It might look good on paper, but if it's not in the reality of our world, we would be just wasting time.
Thank you. That segs kind of well into the next question I was going to say. Is there a role for pilot programs, or are there drawbacks? Anyone? George, you want to?
Yeah.
I think I remember in a recent roundtable, the idea of pilot programs was dismissed as way too timid because it takes a long time and the need is urgent now. So I think that that's something that should be taken into consideration as it relates to pilot programs.
Okay. Timothy, then Kristen, then Linda.
I'm speaking of a pilot program. I rather want to see that the pilot program or kind of like a tweak to the existing program, because the project that I mentioned, it doesn't really perfectly fit into the existing that FHLB products. Because a bank being a developer, there's no preceding case that the bank was a developer coming into this AHP that project. So we want to see that whether that FHLB looking into that, trying to tweak this, like how they can modify the program, or that kind of consider creating that new program, pilot program, that see if this one's actually working. So that's kind of what I'm envisioning for the pilot program or tweak to the existing products.
Thank you. Kristen?
So when I hear pilot program, I basically just think of it as a stepping stone for innovation, right? Because you have an idea, you see a problem, you see a challenge. For example, we're trying to grow African American, Latino home ownership in Illinois and Wisconsin. We know that home mortgage counseling, HUD-certified home mortgage counseling, and all that goes with that can be very beneficial to helping families who might typically not have access to home ownership, didn't grow up maybe in a home that was owned by their family. And so Home Loan Bank of Chicago, there's a pilot program where they're funding the two housing finance agencies so that we can fund housing counseling agencies. And this is something that they're doing out of their voluntary funds, but to us, it's a pilot, and it was presented as a pilot because we're trying it. We know there's data out there that says counseling matters. Does it work? Are we going to move the needle? How do we measure the outputs and the outcomes? But that would be part of the valuation too. So I think if you want to continue to stay close to the unmet credit needs of your community and continue to think about new ways to do that, you have to have pilot programs. Because what's the alternative? To say it's a long-term program, but it's something new. You have to, experiment and evaluate.
Thank you. Linda, then Donald.
Yeah, thank you. Two things I'd like to say to that. If other federal home banks are doing pilots or experience, are they shared among the other members so that perhaps it's working in Chicago? We would love to have that in Detroit. What's the process? I mean, and so how does a pilot project get brought to the table? Is it a format where one of the banks think of it and someone votes on it, the board and all? I mean, so when you say pilot projects, I have a lot of questions around how do you structure a pilot program? Because we would love to help with the homebuyer education and more counseling or other ideas of how do we help educate potential homeowners. What happens in pre-counseling? Again, I'm not asking Federal Home Bank to be counselors, but I think there's a role they could play, perhaps with supporting some of the groups, especially if someone is getting a loan through. I know they have to do the home buyer education, but what's the pre and the after? So looking at some of that as a pilot, because I don't know what the default rates are as far as people making mortgage payments, but sharing that could turn into a pilot program with the support of those necessary tools.
Thank you. Donald? And one question I actually do want you to think about that I will be getting to in a couple minutes is, do any of the banks currently offer products and services that maybe could or should be scaled to the broader system? So that...
Yeah, and I would love to hear them. I love to do a good pilot program, right? As long as we are bringing data-based solutions, and it's based in, like we said, outcomes and really understand the purpose that you're trying to achieve, I think it could help. I don't know how, I'm not trying to give it a period in which it has to be impactful or effective, but you should be able to measure if the pilot is working and if you need to do it at scale. Because I also would tell you we have a housing crisis and everything is needed now. Linda talked about the 500 people who want the repairs and they're a line outside the door. There's an announcement of a repair program in the city of Detroit, and we received 100,000 calls, right? So it's needed, and your dollar, no matter how much you give, is not addressing the situation. So if you're talking about a pilot program to figure out how we really organizationally wise or strategic wise improve our system to better provide the products to the people that we're trying to serve, I'm all for it.
Tony?
Two things. Pilot might not be the right word that I'm about to talk about, but maybe expanding a program to change some parameters can make a huge difference, and I'm going to speak specifically about income. They seem to really limit income levels to the lower end of the spectrum. That's my wheelhouse. I don't have a problem with that, but I also know, like in Michigan, the minimum wage is $10.10 an hour, and I don't know any jobs that actually have that as their starting wage. Where I am, it's over 20-some dollars, and so you're automatically at an entry-level job, almost at that threshold of being ineligible for tax credit, certain levels in the lower 30%, stuff like that. So it's if there could be some relief or some new thinking on that, because your AMI isn't, I don't want to say it's artificial, but it's a lag. It's based on previous data, and it doesn't catch up fast enough as some of these economies are heating up. So if there's ability to experiment with that. The other area, which I think needs to be addressed, is supportive housing for mentally ill people, because not only that is another national crisis, affordable housing at all income levels, and then housing for people with those kinds of special needs really need the deepest subsidies and almost have the ability to have a minimal loan If there could be a way to kind of figure out ways to invest in that or a real patient equity piece, perhaps, that might be something of unique. So it's maybe not a pilot, but experimenting with the capital stack with those.
Thank you. What other services could the banks provide to members, perhaps things like trainings, events, opportunities to share ideas? What other things could the banks do? So beyond just like the loan products, the financial products, are there, I think a few of you had some suggestions in your comments, so I will, Joe, if you want to start this.
I think you could do some, for CDFIs, I think you could do some training which would be beneficial and would strengthen your CDFI members. I think you could do training on things like asset management, asset liability management, cybersecurity issues, financial policies, procedures, things that would make them stronger organizations. It seems to me that you've got the wherewithal to do that and put together some training that would be helpful to strengthen the members, which would allow them to bring more business to you.
Any other thoughts? Are there areas where the banks are uniquely qualified to provide technical assistance? You've provided things like asset management, asset liability management, cybersecurity, and several others. Any other areas? Okay, we can keep thinking about it. So I wanted to get back to, I think, the issue we started to touch on before about, do any of the individual banks currently offer products, or maybe several banks currently offer products and services that might be scaled? So there are things like providing direct support to community development financial institutions or community development loan funds. Or other types of products too.
Okay, here I go again. Some banks, some of the banks already accept unrated private placement bonds. I think you should be consistent across the system.
Those are all for tax credit use?
Yes.
What ways, and just as you're thinking about this also, what ways could the banks support greater information sharing about like promising products and services? So whether it's things that have been effective, again, all markets aren't the same. Something that works in one place may not be suited to another market as much. I think, Linda, you had made some suggestions, I think about was it the Cleveland Housing Network?
Mm-hmm. In Detroit, there are 8 community development corporations that are coming together to address some of the vacant homes in Detroit, and we're lacking capital. So again, I think that's looking at those types of projects that are going on in Detroit that needs more financing that perhaps Federal Home could take a look at and see how they could be involved. That would be because right now there's not, I can't think of anyone who's doing that or looking to do it to make that investment other than the city or MSHDA in that. But we really would like some more capital, patient capital, to help us get this up and going. It's a great model. So what I'm saying is for the Federal Home Bank to look at some models that perhaps could happen in Detroit. Sonia mentioned what she's doing around affordable housing. And again, with the CDFI involvement, taking a risk on funding some of those projects.
Okay. Any other thoughts on that one? We have heard from multiple commenters about the regional focus of the system, and I would be interested in getting your thoughts on that topic. Sonia, do you have any thoughts on the regional focus and what it means from your perspective?
I touched on this a little bit earlier. My organization really intersects with the Federal Home Loan Bank system directly with the AHP grant program. And I spoke earlier about how challenging it has been to maintain a relationship with a member in the regional bank system. So, I imagine that, so this is an area where I don't have a lot of expertise beyond that one particular program, but I imagine that there are trade-offs that have to be considered between sort of the regional approach versus more of maybe a national footprint, which might make the barriers to entry a little bit lower for organizations like mine with respect to that one program.
Okay. Linda or Tony, do you have thoughts in this regard about the regional focus?
My involvement is right now is the NIP program. And so because we've been doing this so long, we figured out how to work with the Federal Home Bank. And this year, I mean, it's been a couple of years, it's been at $7,500 per household. This year it's gone up to 10 because they recognize, 10,000, I'm sorry. They recognize cost of doing business, materials for the home repair. There was an increase, and it's just not the same as it was 2 years ago for a roof. So that was a big, big help to understand that this year they went up to 10,000.
Okay.
So.
Tony or
So
Kristen?
obviously, the rationale for how the banks were set up, and I used the word outmoded, based on population back in the day. I don't have a recommendation on how to fix that, except that just to acknowledge that the problems this causes when financial institutions merge or get acquired, and we lose we have to then kind of go to a different, apply to Des Moines or Cincinnati or Pittsburgh, and it's been difficult sometimes. One of the projects that we were involved in through voucher placement was, having to deal with a whole different kind of, set of rules that this particular Federal Home Loan Bank had, and was imposing on the member institution. So it's not necessarily the footprint as is. I kind of glad that, the way, and I just pointed out at our lunch, we have, Pittsburgh, Cincinnati, Indianapolis, Chicago all in a row within a day's drive of each other. But the upper Midwest is also, we have some of the greatest needs for redevelopment. We have all kinds of different issues. So we do need some attention on that level. But consistency of program implementation might be better than for someone like me to try to tweak, those boundaries. It would be great if it didn't matter which Federal Home Loan Bank you're actually applying to, if it was more consistent on that level.
Yeah.
Kristen?
I'm listening to Tony and Sonia, and I hear the challenge. I guess I think there might be different ways to address that. I just strongly believe that community development means people living in that community, identifying what they want for themselves in that community, and then other actors like some of us coming in and helping them achieve that. And the same way that I also think that the lending institutions, financial institutions involved in that community development effort, the closer they are to the ground, the more likely they are to make a wise and safe and sound and beneficial credit decision. So I think, that's why I think the regional aspect, I think you go to business school or policy school and you come in, you look at that map, and you're like, what is this? Like, there is no other, what other organization in America has the country divided up like this? I mean, I get that. But, and I think that's true. I mean, but I don't like the alternative, which I would think, one alternative, which would be to consolidate. And now, maybe working through different Federal Home Loan Banks, depending on where you are. I think that already happens a little bit. That might be a solution. But the idea that, the answer is to consolidate and standardize everything, and then it's easier and neater. I don't think that's true when you're talking about community investment and community development.
Timothy?
Yes. I think that it's a FHLB structure like a issue because, I mean, FHLB system banks, they have like a public purpose, like public purpose, like HP and then like a funding for the member banks. However, that FHLB is a privately capitalized and they do not receive the federal funding. So basically, they're just running for their own standalone like institution, but they are the umbrella of the FHLB system. So I think that Tony, that is a like really good example because when I work at the bank under FHLB Indianapolis and then merged to another bank, and then the charter changed to I work with FHLB Des Moines. Des Moines does not have a NIM, HOP, AMP program, so we cannot use that program, but there's a tons of customers calling us, can we apply this? We did it last year, how come you're not doing it this year? So that's kind of like confusion and then the resources that we're like wasting because of the change of the FHLB charter membership. I think that's a systematic issue, but I mean, just like you mentioned that if there's some consistency or overarching structure, I think that issue can be like overcome. The regional effort, I think that FHLB in that Detroit office is quite intriguing. I mean, standpoint of the financial, it is a huge investment. Maybe that the overhead cost is a huge to their balance sheet and a P&L, but I think that closer proximity, the presence is really that prominent. And then that's why that from the local community bank perspective that we are trying to use at the local appraisal, like local authoritative and local, like a people trying to know that the true value of the where you present and then trying to find out the needs from the communities.
So picking up on that, are there other opportunities to strengthen the bank's connection to the communities in their districts? And how might they also support local agencies responsible for housing and community development? Depending on where you're working in the system, you may have different perspectives on that. Donald, would you have thoughts on that?
I saw your eyes glancing over at me. So I think you guys have done that with the city of Detroit, with starting the office and pointing out again Anna Shires being in that office, and like I said, I think it's extremely important to understand. And not every city is the same, and every community is the same, but for the city of Detroit, for example, there is a strategy that we are trying to follow, and we're hoping that the strategy that we're putting forward, and I think we've done a pretty good job of this, announcing what the strategy is, telling people where we're investing all of our infrastructure dollars and additional funding, where we're going to be putting that funding into, and like what type and what do we want to see with a understood planning effort. But it's there to also give the banks a pathway to understand exactly how and what they should be lending and giving their time to, right, and their resources. And so we hope that we want to do that. But when you have a bank that's on the outside, it's really, really difficult for them to understand that process. And so having a local person who is ingrained into what we're doing every day is just hugely instrumental to what to the work, and we're hoping to connect with her more on additional programs that we're trying to do. But I think it can't be undervalued on how important that relationship is.
Tony, did you have any thoughts on that?
Yeah, I know you allow, like when there's a natural disaster, some waiving of rules and regulations to be able to get involved right away. You know, maybe not something that's not in the plan that's been filed or what have you. And I would simply think that there should be some flexibility for kind of small p politics kind of stuff, because things change quickly at every state level, you know, with a new governor or with a new legislature. You know, there could be monies showing up that we need to be able to react to pretty quickly. And I don't know how you implement that in a regulatory environment, obviously, but there should be an ability to say, hey, things just completely changed in this part of our world, and we need to be able to be a partner.
Okay, thank you. Sonia?
I'm not sure if what I'm going to say now is responsive to this question, or if I'm actually going to take us back to this more general question of what are some products and services that would be useful in community development. So later this year, I believe I will be announcing a project with our local government agency in which my organization is going to pilot home ownership for 60% AMI Detroiters. And this is in Detroit at least, and I imagine in many other communities, this is a particularly difficult income level to service for home ownership, and it's even more complicated in Detroit because this particular housing product that we're going to use is a renovation product. And so I find myself spending a lot of time thinking about how do you put someone in an affordable home situation, not just day one, but make it sustainable over time. And one of the biggest obstacles is really sort of the ongoing maintenance of these older homes. And we expect that the sourcing for these homeowners are going to come directly from our existing LIHTC portfolio. So we're going to take existing renters and figure out who's ready to make this leap, and then move them into this home ownership opportunity. And as we're kind of mapping out the sequence of this pilot program, organizationally, we keep coming back to this notion of how do we turn this away from just like it's a pilot, but it'll be a few people who kind of like win the lottery, right? But how do we turn this more into something that's programmatic across our rental portfolio? And one of the ideas that we keep coming back to is a little bit tried and true, right? It's this idea of a resident equity program. It can take a bunch of different forms. It can be savings accounts. As an organization, we would be more than happy to return a portion of rent or a portion of net income at the property level to individual renters if we knew those accounts would be sort of designated for wealth building activities, right? Home ownership or something else. There is this huge administrative burden that is sort of difficult to overcome in that. And I just sort of find myself wondering if the Federal Home Loan Bank, if there wasn't sort of a product that could be designed that would be a little bit more plug and play, where you can sort of just drop a bunch of accounts into a rental apartment community. The owner would fund portion of it. Maybe there'd be some small matching portion from member banks. So I just wanted to, in response to your question around, like, are there some other areas of community development that provide an opportunity? And I do see this sort of like wealth building at the rental community level as a place of untapped opportunity. But it's tricky because a number of partners kind of have to come together to make that work. I do think that technology has lowered that administrative hurdle in looking at something like that. And I just find myself wondering if this isn't a place for innovation.
Interesting, thank you. Donald?
And so, and my one last point, just on the local, having the local presence, which I think is important. But I do think it's like often like it's one way. The flow is one way. It's like, here are the products we offer you, and then we look at the local person. We say, hey, great, this is how you can fit in. I want to know if we can give a voice to that local person to bring products back up and solutions and innovation back up to you guys to say, like, well, this is what actually the community needs. And so there can actually be a change in what the overall umbrella like thinks about what they can do for communities. I just wanted to push that out.
I can go ahead and answer that one. Yeah, absolutely. Put it in a written comment and send it in.
Because that was my question. Where is the input to have? I'm sorry. where's the input to have those discussions? I mean, how do you start them? Do you do it at the local, federal, home? Is there someone that's similar to a risk, a person who will hear and say, no, we can't, just what do you do with that information? So is it part of the comment? I think maybe that's the answer. When it's time for comments, you put them there.
Yeah, I mean, I'll just functionally try not to jump into this conversation too much, or it becomes a question and answer for me. But we do have the comment period that it's part of this process that's open right now. That I would recommend that anyone that has very specific ideas that they're seeing in their community, things that could be helpful that Federal Home Loan Banks could do, anything that could be sent in on that front would be great. Obviously, the Federal Home Loan Banks all individually have their own mechanisms for taking in that feedback as well.
Okay, thank you.
Yep.
I mean, just wanted to add, I'm not working for FHLB, but I'm kind of talking about FHLB system. I think that there is a scoring requirement and a metrics that how to change how to evaluate the needs from that community and the members. So I think that if you coordinate with your contact at the FHLB, the system bank, they are kind of just trying to evolve within the system that how they change the scoring requirements and some of the metrics that because they are just updating that AHP and then the related grant program on an annual basis.
Okay. Well, we've asked you a number of questions, and I know at least one of the things is that we've asked you is sort of what new ideas should FHFA consider, and either what is the single most important change you recommend, or what are essentially new ideas that we should consider. And I'd sort of like to give everyone a chance at this. And I guess we'll start, if we could start again at the end with Kristen, and we'll go around the table. But feel free to interject if you have comments on one another's. So, Kristen?
It's hard because it's changed now that I've had this 3-hour dialogue. First of all, I just think what you're doing today is really important, the listening. You're doing it from the national level. I think our individual federal home loan banks, through the community investment advisory councils and through other mechanisms, also, they're out there listening. We're running a supportive housing institute, trying to grow the number of typically nonprofit developers that do that housing for people at 30% AMI that need supportive services. And at one of our presentations, there was a member of the Federal Home Loan Bank, a Chicago staff, listening in, learning, hearing what the needs are. I mean, that was all really great. So, but what somebody said here, which is more than ever, this affordable housing finance system that we have, ecosystem that we have, no one entity can act alone. And Donald talked about now more federal dollars, and that will eventually go away, but there'll be something else. And so just continuing to understand how you fit into this bigger affordable housing finance ecosystem, like when the AHP deadline is in Illinois versus when we do our low-income housing tax credit application and awards, that timeline, even just that is sometimes hard to, we've worked at it, but I guess today, right now, I'll say continuing to understand that role, and so that means listening, participating, and constantly trying to listen to more unmet credit needs.
Thank you. Tony?
So we often sit here, we're talking about the financial plane of the Federal Home Loan Bank system, but one thing we did today, which I was very glad about, we started talking about the people we serve. But the third thing, and this is of concern of mine of late when I speak to groups, a cautionary area is how many of us are actually spending time with the output itself. What are we investing in? What is being built? What does it look like? How are decisions being made on delivery of that product? Because it wasn't that long ago we did value engineering at the end of a project to save money. It seems to me, and Donald's comments that were submitted in advance brought up skyrocketing costs of construction material and labor. we're starting with value engineering, and so we don't have anywhere to go if it gets in trouble. And so from the financial side of things, how do we play in that realm? And I think it's important for people who aren't used to being on construction sites and seeing when these decisions are made, get there. See what the output is during construction, at the end of construction, see what decisions were made, and make sure that we are fulfilling our duty to provide quality, affordable housing at every level.
I don't think there's any one initiative that you could undertake that would solve the affordable housing crisis. But I do think that some of the things that we talked about today could contribute to the overall challenge that we face. I think that local involvement is very important because the markets do vary and the issues and the challenges do vary from place to place. I think it would be helpful to hire some community development lenders locally. I think that it would be helpful to bring experienced local community development professionals onto your boards. I think that that local input could be helpful to develop new ideas about what should be done locally as opposed to nationally. I do think that you need to have sort of a hybrid approach. There are certain products that that should be consistent across the board, but then there should also be the flexibility to respond to local needs. I think you should not be afraid of CDFIs. Work with us. We do good, impactful work, and our missions are completely aligned here. We may disagree on things, but at the end of the day, an open dialogue, I think, should produce some results that will be positive at the end of the day.
Thank you. Linda?
On that line, I'd like to see member banks come together with the community. Similar. I think there are opportunities that the member banks may not know that's available to partner with some of the developers in Detroit that are doing work, nonprofits, for-profits, whatever it may be. But I think some type of, and maybe that's a measurement too. How well, what is the bank doing? What has it done in the Michigan, Indiana market? And getting them more involved rather than just being a member of Federal Home Bank, meaning understand some of the challenges that we just talked about today and how can they play a role in it.
Thank you. Donald?
Right. So I think I definitely beat the drum on focusing on outcomes, and so I won't go there. But I would just say alignment, right? I see a lot of duplication of efforts, right? Just for an example, to pick out one of many of your programs, the NIP program, for example, which Linda does an amazing job in. We have, City of Detroit has dedicated $200 million for rehab and repair, right? And we know other entities right now that have dedicated upwards of $25 million to it. It's like, how do we all come together, right? There should probably be like the funding should probably be just like together and how we move forward, in alignment and how we move forward so we can be impactful. I'd also would say it's really important to invest into a policy team if you're a financial institution. Who's your person who's helping you think outside the box and really look at innovative solutions that are happening around the country.
Thank you. George?
It's nice to hear, and I think I agree with the sentiment around the table that what the Home Loan Bank does is good. It's helpful to the communities. My question back, and I know I'm not supposed to ask questions at this stage of the roundtable, but is why not ask for more? If this amount is good, is twice as much better, 3 times as much better? And I don't think that that's an unreasonable request, given the current state of the housing markets and given the mission of the home loan banks. So I would encourage that question to be asked today and going forward. And it doesn't necessarily need to be money, but it could also be risk-taking. So the banks, as I said, don't take a whole lot of risk because that's not what we're in the business to do. And isn't it possible for the banks to take more risk and accommodate a lot of the good ideas that have bubbled up throughout today's discussion without causing consternation from management or the boards or the regulator? And I think there are, but you need to think of a different way of going about covering that risk. So the banks have a huge amount of retained earnings now. Doesn't cost anyone to allocate a little bit of that to risky, or what are perceived to be, I take that back, what are perceived to be risky activities until we learn more about them. So that's almost a free check to accommodate something that's innovative and moves in the right direction. So those would be my two takeaways from today's session, which I think was very helpful, and look forward to it progressing.
Thank you, Sonia.
Well, I certainly support the idea of making the pie that's available to affordable housing and community development larger, so I think that's an excellent suggestion. Keeping with that, I would continue to advocate for the exploration of capital tools that are needed in communities that maybe are too risky for individual member banks to take on. Kristen took this idea to one natural landing place that is perhaps getting involved in credit enhancement that would allow those scarce capital tools to be brought forth in community. And then I'll land on something that's a little more narrow than that. This is specific to the Indianapolis Federal Home Loan Bank. I believe that there are some regions that, for the AHP application, I believe that there are some regions that allow for points for in-region applications, and that is not the case currently in this region, and so it effectively penalizes those of us who have projects in this region, and so that is done differently in different regions. I'd sort of ask for maybe sort of a policy position or some analysis on the pros and cons of that particular decision.
First of all, I would like to thank for FHFA to arrange this roundtable to exchange views from that subject matter expert, from the diversified at the segments in our area. Before I joined this roundtable, I thought, FHLB Indianapolis is doing tremendous job. There's nothing to talk about for their products and services, but I kind of noted that there's some room for improvements, and then hopefully that what we discuss can be reflected into future FHLB system banks. I learned a lot today because we talked about really field level and a micro level, but just one comment about this macro level. That FHFA is a regulator for that FHLB system. One example I noted is that when I switched over to FHLB Des Moines, that there was a cannibalization of the FHLB system because FHLB Des Moines, the number one, the borrower from the advance is Wells Fargo. Wells Fargo has a very high advance amounts, but at some point in time when there's a lot of liquidity in the marketplace and Wells Fargo repaid all the advances that they have the FHLB Des Moines. Obviously, revenue stream came down, and then that impact is actually going to the AHP, that budget, because they have a 10% revenue went down, AHP, that budget really went down, and then it was like a race to get that AH funding. When the window opened, everybody jumped in. By the time the smaller institution trying to get that AH funding, the funding was not available. So I think that that's kind of a systematic issue again, but if there's a way that you can think about how to make the AH fund available for the greater cause, that might be that serving that the mission statement of the FHLB System Bank, that provide the liquidity to the member institutions to support the financing, housing, and community investment.
I'd like to add one small thing, share best practices from across the region. I think I haven't, I always look for opportunities that maybe something is working well somewhere else and bring it here. So looking at across the footprint to see if there's anything that we could bring, to our region.
Absolutely.
Yeah, thanks.
So in closing, let me start by saying thank you to everyone for coming today and sharing your thoughts. I know some of you had walked across the street, some of you drove several hours, some of you took a flight. And I appreciate you making that effort to come and join this discussion. As everyone knows, we've been kind of on a bit of a roadshow with this. We still have several more roundtables coming up, but we also have a listening session that will be held from March 22nd to the 24th for anyone to get their kind of last final thoughts in, if anyone wants to participate in that or knows anyone that they think should participate in that. We also are currently taking written comments. So I would encourage anyone that has any more detailed thoughts on things that the Federal Home Loan Banks and the FHFA should be considering. I would encourage you to also submit it through that avenue as well. All that information can be found on our website. Let me also give a big shout out to the FHFA team behind these efforts. I will tell you that you're looking at me and Amy today, but there are countless hours that have gone in to round up participants for these panels. I know all of you have dealt with at least 2 or 3 of the people in the back of the room. We also have people back in our office in DC that are doing tremendous work to make these things happen. So thank you to all of them for that. And with that said, I just will finally kind of conclude with just one more thank you for your time today and for all the thoughts that you gave us. And the one thing I can commit to you is that we will take it all into consideration. So thank you all very much.
Thank you.
Thank you for the opportunity.